He's out of high school.
Arguing about an anime game, bro, on Roblox.
Gavin, dude, lock in. He's
Dude.
recording.
Yo,
I mentioned this a second ago, but since we've had this like nice quick reaction off the upper half of the daily volume imbalance, the lower one. So I mentioned in my last one that I was watching this upper one, which I was still watching, but because this lower one is down here, I didn't mention this, and I didn't realize this at the start too, but I should have mentioned it when I did, that I had to allow for it to wick past this daily volume imbalance and trade into this one. And this happened really nicely where it did so, and it like immediately had a really nice bullish reaction. So I can anticipate that this volume imbalance, if we're going to be bullish, it shouldn't be traded back to. And I can assume that for right now, we're probably going to try to press higher. So that's just, but we're going into NFP tomorrow, or it's on Friday, but tomorrow is Thursday, so I don't want to be trading that day. So I want to see what happens and how we trade around this point. And I'm pretty much just going to do a review now because nothing's like really clear to me, to be honest. For today, real quick, I just want to mention PM session. So since like around Asia, we've kind of been like consolidating and going higher. Kind of mainly the notable thing is like I'd say this is high resistance because we're creating like relative equal lows, going higher, sweeping them, which is fine. Okay, but then we go higher again. So this low should be a protected low. But then it's going ahead and sweeping it again and trading higher. So the fact that it's doing that tells me, yes, we're most likely in high resistance. And then the only chance I could give it where it's like maybe they were just building positions down here for right now, so I might want to switch to low resistance bullish right here, would be at like market open right here. After we swept the low, that had already swept the previous low. When that went higher, I could that could be a chance to like take a partial right here and see if it wants to go trade higher up towards this buy side, or like this wick actually was pretty interesting as well. And yeah, but we ended up like still trading back into the range, going higher, trading back into the range. And then right here, we traded higher, and we didn't trade that deep into the range. And I'd mainly consider that at this point because it's already had so many attempts to leave. It's had so many chances to like take off already. I'd consider this to be like a trap where they're kind of just setting it up, consolidating up here to set up buy side, grind the shorts out, and let smart money build positions. And then we traded up into this 15-minute order block and this old buy side right here. So this one singular high that we kind of worked around right here. We traded, broke down beneath. And when we trade above it, I want to see how we trade it. And we tapped that and that old buy side. And the order block that taps it, or the candle that taps it, flips bearish. And so that was a nice clean sign that, hey, we'll probably want to go lower now. So now I'd like try to hop on 5-minute time frame. We've got this order block right here that, like, we had a candle past it that dug higher, but on this time frame, this is the order block. So I take this candle, and if it traded beneath these 3 candles quickly and stayed beneath them, that's when I'd try to take like these 3 candles. But on this time frame, I feel like it's way more obvious, like the bodies are more respecting of this one. They try to respect this one, but not really. And then yeah, we tap into that order block right here and flip bearish. So like I can hop onto a 1-minute And I see right here that on the 1 minute chart, like I said earlier, like if it broke down beneath the consecutive candles, I could use those as well. So I'm just going to take this 5 minute off and look at this 1 minute now as well. And this is a breaker as well, this entire range. So I like that we stayed in the lower half of that range. That tells me that we're probably going to be weak. And then we trade down, trade into the NWOG, and then the bodies close right on the high right here. So that tells you that we're not done going lower yet. Unless like we really like aggressively broke away higher from that. That tells you that we've still got room to go lower. And then we trade lower aggressively, slam down, trade back up within the next candle. You want to see this act as a immediate rebalance because we've left the range of this like whole consolidation. So this whole range, we've just left it. So I want to see this, especially because, you know, the body's closed on the high of this NWOG right here. So if we slam down from that and break beneath the range, I want to see if it aggressively comes back, which if it didn't, I'd want this to be a breakaway gap. But the fact that it aggressively came back, I want to see this act as an immediate rebalance. And then right here, we try to slam lower from it. The thing that's good about it is after we create the immediate rebalance, the candle after digs into the wick, and then we trade lower within the next two candles and sweep this low. So that tells you that, hey, like, we're quickly using these PD arrays to trade lower and attack discount. So this might be like a point where, like if we are willing to stay beneath this candle, then we're probably going to continue being bearish. And like quickly, you know what I'm saying? The logic behind that is kind of you just want it to, you've seen a signature that it's going to maintain speed. And pretty much like if it creates a change in the state of delivery like it would right here, that's a signature that it's kind of lost that speed. You know what I'm saying? That it's needing to have a deeper retracement than you would need, especially because this change in state of delivery would kind of slightly invalidate this immediate rebalance. But then what happens is we come back up into it one more time, tap the new week opening displacement, so Sunday's fair value gap. I mentioned this in my last video. And the bodies respect the end dog right here all at the same time. So that can be a nice short right there. But if you miss that, we got this order block that tapped into the end dog. My bad, I dropped something. And it also created the immediate rebalance. So and we tap into that, go a little bit deep, which is fine, especially because it can trade above mean threshold, but the fact that it didn't is better. Because that means it's weak. It didn't even need to. And then, yeah, the candle that tapped it flips bearish. That can be another short. And then the third short opportunity would be like right here, where we trade beneath this low and then create a volume imbalance. It would be preferred if the volume imbalance was a little bit lower, like fully past this low. But it's okay that it's not. It's not that big of a deal. And especially because it was treated like this, where we perfectly, right after we create it, with the candle that creates it, we perfectly tap the high of it and immediately start running. That's an immediate rebalance right there. It's a different form of it. But yeah. That was pretty much, I mean, you could have taken this fair value gap, but the stop would have had to have been above consequent encroachment of this fair value gap. Which is still fine. That wasn't a bad short either. But honestly, I don't know if that one, if it wasn't silver bullet hours, I don't know if I would take that one. But yeah, so that was the nice. Oh shoot. That was a nice short opportunity, dude. I left my phone. I record my audio off my phone, and I left it so far away, but it's cool. And then I'm not okay for the run higher. I didn't see this because I wasn't really paying too much attention to this lower volume imbalance anymore, even though I should have been, because there was logic to it. But yeah, this was a nice long opportunity, because what happened here, I don't know if you guys watched the live stream I sent in, but he kind of like, I've just been seeing examples of that a lot, and I kind of want to send them in, especially if you saw the live stream, just to kind of reinforce the concept. Is that, so right here we swept all this sell side down here, and then and this sell side right here. So after we kind of get aggressive like that, you want to see, do we find bearing, and do we want to attack the premium of this fair value gap, so like the high end, the extremes of it, and do we kind of like want to, if there's another premium inefficiency, do we want to try to attack it? You know what I'm saying? Like if there's a higher fair value gap, do we want to try to tag it a little bit? In this case, we do. In this case, same with the lower fair value gap. We work outside of it a little bit. We trade to the extremes above it. And then it's fine if it comes back down and comes past it, because it's kind of just balancing this area out. Like I feel like you can kind of see it. Is that like, so the bodies close on the midpoint right here, and then we trade above and trade below. You see how the bodies are trying to close right around the midpoint right here? That's making sure that this area is like kind of fully balanced. I'm not saying this is like clean, easy price action whatsoever. I'm just saying like price was kind of being held within here. It was constantly just trying to leave and rebalance the zone. And like right here, it left it with the fair value gap. Immediately coming bodies are like respecting the high of that fair value gap. They're not like respecting, but they're kind of like filling it in, you know what I'm saying? And then they trade all the way back down, and then they're digging past into this fair value gap, a little bit past it, which is fine, and then right back into the range, and then finally trades above it here, and then the bodies respect the NWOG. Wait, hold on. The NWOG low. So I took off the higher daily volume imbalance because it was kind of getting distracting. But the bodies respect the NWOG right here. And also this volume imbalance right here, which is above this buy side and this buy side, which we've created a fair value gap past. So especially when you have reasoning to expect a breakaway gap, so like if we create a fair value gap through buy side, that is a potential breakaway gap. That doesn't mean it's going to be a breakaway gap if we create a fair value gap through buy side. It's just a potential breakaway gap. But if you see something like this, like a potential breakaway gap, and then you see a volume imbalance form right after it, as it's trading down, if you're super confident about the trade, you can take a trade like inside this volume imbalance and go long. But if you're not confident, you can wait to see how it's treating this volume imbalance and these highs. Like, are the bodies trying to respect like the upper half of this fair value gap, like above these highs, which they are. The wicks trade down into both these highs and do the damage, but the bodies are staying above here and above the volume imbalance as well. And then, although it said like the little purple line is an end dog. It's like small, so it's kind of like just a closing price of closing and opening price at, what time is it? 6 p.m. Eastern. So it's still important, but it's a little bit different in my opinion because it's not like a range. It's just a singular point, so it's not like really an end dog at all. But yeah, I forget where I was going with that. We trade above, so again, going back to what ICT mentioned, so like the lower fair value gap, you want to see a trade above it and then trade into see if it can try to trade into these premium inefficiencies and then break down, and then like it can break down, and then like if it was really strong, like it didn't need to build positions, like if price wasn't being held here, it would have just kind of tapped this inversion fair value gap and tried to go higher. Maybe it could have tapped this like mitigation block right here, or order block as well right here. But yeah, it would have been optimal if it stayed higher from this inversion fair value gap. But the fact that it didn't, that tells you that either you're wrong or they're giving smart money a chance to really build positions down here. And then so you see we failed to break beneath the extreme lows down here, and then we get above the lower fair value gap right here with the breakaway gap actually. So like the body right around midpoint of this inversion fair value gap. Sorry, I need to take the volume imbalance. So actually that kills the whole theory, so I'm just gonna take out that idea. But yeah, we trade above with the fair value gap, respect that fair value gap and the NWOG, trade higher, and then now we've got a new combination fair value gap, but in this case it respected the high one, so I'm just gonna mark out that one. And which is inside the inversion fair value gap, which we've already closed past, and the bodies are now respecting. So that's kind of like a nice long area. And this is also around midpoint of opening range gap. So like we're only having imprecision of like a couple points. So that's good. That's kind of respecting that point. Even though it's better if it's a little more perfect, but and then we immediately rip higher towards this buy side and into the old buy side one more time, and then we stay higher. So again, with the volume imbalance concept, we're staying higher, and yeah, so it's kind of just in grind mode right now. But there was also something I wanted. Also, if we just I have a question for you guys actually, because I was a little bit mixed on it. Would you take, as your 9:30 first presentation, would you take this fair value gap? Because you got to include volume imbalance, so this is still a fair value gap. You take this one? Or would you take, this one's a little bit small and it's covered by the bodies right behind it, so I'd prefer to take the higher one. So would you take the higher one or the lower one in this scenario? Because like I can see...
bottom tick, so it doesn't matter.
You bottom tick, so it doesn't matter? Alright. Gavin, what you think?
Bro, don't ask me about this stuff.
Don't ask... Alright, bro. Alright. You're cool, bro. You're cool.
You're too crazy, bro. Yeah, you gotta be insane.
But don't you include volume imbalances in the fair value gap?
Yeah.
And you're counting that first one as the first presentation?
Yeah, the lower one?
Yeah.
I mean, it follows all the rules, but it looks kind of off because it's mainly the volume imbalance holding it up. You know what I'm saying? But this one looks a lot more like, like a fair value gap.
I'll do my own research.
Alright, maybe if Slazzy watches the video, he can tell us too. I think he might know. But let me go to yesterday then. Okay, just review this one thing, and then I'll probably hop off or answer any questions if you guys have any. And then, yeah, hop off.
Oh yeah, howdy. Whenever you're free, bro, do you know if ICT has any like videos on high resistance or low resistance? I don't really know.
Yeah. I think I'll try to send you some live streams mainly. Even though they're long, it's kind of, you can just see it like live. Like each time, like you can see exactly where he kind of figures it's high resistance. You can see it happen live. Alright, going into yesterday. So we sweep out the... Sorry, I'm kind of a little bit blind right now. Just because I took off my... Because I took off my first presentation. So I can't see as much, but pretty much just like raw looking at it. It's just, we built up all this relative equal low business. And sweep it all out. And start trading higher. And what's it called? Shoot, there was something else of importance. Oh, I mean, okay, this was similar to the ICT model from before. So it was, so sell side right down here. When we sweep that sell side, do we chase the extremes of the, most, like, closest PD array? Yes, we do. We trade to the upper half. Like, not the upper half. Like, we trade above it. And then do we try to trade towards this, the higher PD array? Which it tries, fails a little bit, which is fine. But it attempts to. It gets real close. And then the bodies respect the inversion fair value gap, trading down, trade above. Go trade down into it. The bodies respect right here. That can be like a potential long entry. Just based on like the ICT model. You know what I'm saying? And then same with right here. And then you have to allow it to sweep it. It sweeps it once right here. And then the bodies are still respecting, and it creates, again, relative equal lows. So you have to allow it to sweep it again. And then bodies are staying within this fair value gap, which is interlinked with the inversion fair value gap, the higher one. So I gotta assume that the whole range has to be related to the most recent fair value gap. So I would prefer it not trade beneath this, but the thing is, it could have tapped this inversion fair value gap one more time, because the bodies are respecting the high of this, so I have to allow it to want to tap it one more time. You know what I'm saying? Just because when it's like body liquidity, kind of. But I don't really want to go too deep into that because ICT talked about it a lot in the live stream. But so respect the midpoint of the inversion fair value gap, trade higher. So I would wait to see how it treats this inversion fair value gap, especially because the range is just starting to form, and I'm not goated like P, you know what I'm saying? I don't bottom tick unless I'm like super confident, and I like, what's it called? You got your model that you're confident in, but like my thing is like I don't have stuff like that. Like I'm more confident and I have a higher success rate with waiting until I know for certain where we're gonna go. You know what I'm saying?
Continuation
But yeah, so I'd wait to see how we treat this, and we treat it pretty nicely. Like all these sweeps are okay. I have to allow for that, and we respect midpoint, trade aggressively past these highs with the fair value gap right here. and this is a breakaway gap. And the body's closed like within it once, like just by like a tick or two, but that's fine. You know, you have to allow for that. And then we fill it, and then immediately start expanding away quickly, which is what you want to see. A high probability trade setup, by ICT's definition, is always sweeping liquidity and filling a fair value gap. And I think it's way more high probability if we do that and then immediately show a reaction that we're expanding away. So like right here, like within the next candle, it's already above this high. And then, you know, that still wouldn't be like enough for me too much. But then what I see here is we tap into the fair value gap again, which we previously closed inside of twice. We closed inside of it twice and then immediately slammed out. And we tap into that, and it's only with wicks, and we tap into the order block down here, which you can take the higher one too. It doesn't really matter, but this one looks cleaner to me because it's like the high of the body is within the fair value gap. So I like that. So it taps both of these points, the order block and the fair value gap, and then it flips bullish, having an immediate reaction. That can be, that was a long yesterday. I haven't been recording lately, I'm not going to lie, because it was my girlfriend's birthday today, and so I've just been a little bit busy. But
So what you doing here, bro?
dude, I mean, her parents are throwing like a party with like the family and shit, you know what I'm saying? Like, and some of the family don't know about me, so like,
But you gotta become family oriented, bro.
dude, I like soon, bro, soon. But and it's also our 3-year anniversary tomorrow.
Yeah.
So like, yeah, I've been like stressing.
Gavin, he's recording, dude. Seriously. Put it together.
Alright. Dude, I get like 5 views on my YouTube channel, bro. You're chilling, bro. Like only like the people in the Discord are gonna be watching.
My ears ringing.
Alright, so yeah, when we tap that and flip bullish, that can be a long. And then I took it personally, I just took it like past this high. When we like swung past it, I was up like 20 points. And I was like, alright, you know, like I just woke up. That was like a clean trade. I'll be done. And then we come back down immediately. And I was already out. I wasn't watching anymore because I was just getting to my day. But what happens after that is we come down, and within the next candle, so we create the fair value gap, and the next candle right after that we tap the low of the fair value gap with it. So I want to see, does that act as an immediate rebalance? And then it does so. You know, like we immediately kind of expand away, trade higher above this high with the volume imbalance right here. So you can assume that this fair value gap is an institutional order flow into drill. And then we use that to go higher. But then we kind of like run out of juice pretty much. You know what I'm saying? And this wasn't the most obvious run, especially because it was above all-time highs, I'm pretty sure. But the one thing about it that stuck out to me, what I was paying attention to, was... Shoot. Oh. This previous run, so this run that had... So we generated buy side and sell side. And this run lower, this range run lower, I'm actually going to get into that a little bit later too. This range, what's it called? I want to take, it's also a manipulation leg. I want to take standard deviations of that. And we fail to reach -1 standard deviation. That tells me, and we just missed it by like a couple ticks, which is what you want to see. And that tells me that we could, if we start breaking down here, we could want to really break down quickly to sell side. And at that moment, the closest sell side was right here. So I feel like that wasn't too much of like a scalp wasn't really allowed there too much. Like maybe you could have seen it change in state delivery and order block flip bearish. Plus, you would want to see this act as an immediate rebalance. But that wouldn't, like, that's not enough for me, in my opinion. Like, I feel like if I try to take that, generally, I'd probably get cooked trying to do that. So I'd want to see, does it break down? And it does. It trades down quickly into these lows. But before it does so, it creates 2 more immediate rebalances on the way down. So I'm thinking, all right, this could be a trap, which would make sense because we just missed this -1. So this could be a trap, and it's just gonna rip up higher quickly and take this liquidity and tag the -1. Or if we want to respect all 3 of this immediate rebalances, then it's really bearish and it really wants to break down right now. And so I'm watching after it breaks down through this low, which by the way, the fair value gap I was looking at earlier, I want to see how it treats that around the low. And also when we create this new fair value gap inside of it, now we've got a balanced price range. So I want to see how it treats that. And what do? We stay in the lower half of both of them and immediately trade lower, change in state delivery. Or not, it's not changing, but, create an order block. And then tap into it, flip bearish. And also, this is also first presentation fair value gap. So that's also, that's extra importance right there. And so the order block that tapped into the first presentation, let me make that blue because I always make my first presentations blue. My 930. So, and what's also, I didn't mention, the lowest immediate rebalance, what was nice about that is that it's immediately rebalancing the high of the first presentation fair value gap. So, like, when you see it close inside of an expected inversion fair value gap, you want to see it trade to the high of it and have some sort of sensitivity. We can go above it a little bit, like right here, we went above to create the immediate rebalance, but in the end, we were sensitive, and we traded lower real fast. So optimally, it's going to stay away from the high of this first presentation already. And you can see it stays below midpoint again. So that's 2 really, a couple really weak signatures. And then this order block can, for me, that would take the cake. I would take that. But maybe if you were still not as confident, I think you would just miss the setup at that point, to be honest. Like, maybe you could see how it treats this immediately rebalanced wick. So actually, I'd pay attention to the fair value gap behind it, to be honest. That's of importance. So when you see an immediate rebalance like this one, you want to pay a little bit more attention to the fair value gap. And honestly, I still really don't see a setup like that. I guess you can say, then this is really pushing it. You can say that we closed inside of the inversion fair value gap, and we were so weak that we didn't even need to go tap the high with this candle. We just broke down beneath these relative equal lows and beneath midpoint of the inversion fair value gap or immediate rebalance. And you can maybe try to pull a short while this candle is trading up. But that's so pushing it. I'm not even gonna lie, that's so pushing it. But that's some logic that you could potentially there's always some logic to work yourself into a trade. So never worry about missing out on a trade, because even in this scenario, even though you're pushing the logic, I wouldn't take this trade if I already missed it. Right here, we have this the previous fair value gap I was looking at, which is also, I didn't mention it yet on this video, but every 15 minutes, the first fair value gap that forms, you want to pay attention to that. This follows that. We previously used it to go higher, and if this is going to be a market maker sell model, so consolidation, trade higher, trade lower, then I'd want to see everywhere, any PD array that we use to go higher, I want to see that kind of get inversed. And so right here, so this inversion fair value gap, I'm watching the bodies respect midpoint, and then midpoint of this previous range I was talking about again, which is this is a kind of an important range where it creates both sides of liquidity and it sweeps both of them within this range. We refer right back to the midpoint of that, and we're also inside this breaker. And we're trading around the midpoint. We're not really closing above it, which is a sign of weakness, but the fact that, we've already traded so low and we're trading above the midpoint, that tells me that we might have lost some speed. So after we trade beneath this low, that's for sure a partial. No matter how weak you think it's going to be that day. I mean, the way I trade, for me, that's no matter how weak I think it's going to be when it trades beneath this low, that's a partial for me. But then I see it trade up and it starts trading down, and I immediately know from this deep retracement, because normally wouldn't you expect, like it left this as a breakaway, for example, you could expect. And then next fair value gap, you can expect institutional order flow and draw, and we're in silver bullet hours now. And it still kind of treats it like that, the fair value gap, it gets used to trade to sell side. But then it immediately trades higher above both the breakaway and the expected institutional order flow and draw. So the fact that it does that and then still comes down and reclaims it and goes lower, which is clean. But the fact that it's doing that tells me that we're in high resistance. That's just one signature right there, that we're probably in high resistance. And then right here, we create relative equal highs. Right here, we're just building and building highs. And then we sweep them all, trade lower again. That's another sign of high resistance. And then we see an extended price run. Hold up. Let me make sure I'm not spitballing. Sorry, Oh, what's up, Slazzy?
Yep.
What's up? I forgot to mention, and I honestly just it slipped my mind, to be honest, but certain times where you can expect high resistance and be okay with it is if you're beneath lows or above highs. So pretty much what that means is it can go both ways, where if you're, for example, beneath liquidity right here, sell side liquidity, you can you can allow for high resistance because they're just building positions down here. But then at the same time, if we were to continue past this liquidity, which is the example I was just looking at, so past this low right here, the white, then you want to see it consolidate around here and mainly be willing to stay beneath this. It goes above it a couple times here, but the first time, you got to be willing to that inversion fair value gap I was talking about earlier. There wasn't really a setup before that, and this is going to be, of course, a decent, a good place to take a partial, because it's kind of not terminus, I'm forgetting the terminology for it, but it's the low attached to this entire run. So yeah, after that, you kind of just want to see how price reacts, and then bodies respect midpoint of the inversion fair value gap and midpoint of the previous range, and we trade back beneath. And
what day was this, Hadi? Was this yesterday?
This was yesterday. And what's it called? And then here, we trade above the low again. This low, we trade above it again pretty aggressively. But it's kind of allowed to do that because if it didn't do that, it wouldn't be in high resistance. If it was just staying low beneath this low, then it would have just been kind of a low resistance clean run, and it would have probably ended a little bit earlier because they're not generating as many positions, so they don't need more time to take them off or more run to take partials off. You know what I'm saying? But the fact that it's kind of allowing this high resistance to form is telling you that they're kind of, maybe, you don't know for sure, because until you see a signature like this where it creates all these relative equal highs and it's just kind of like it's getting closer to them, and then it finally sweeps them, and then it doesn't need to, but in this case it broke down really quickly, creating like a Venom model. So balanced price range through the relative equal highs, and then so that's kind of like a signature that you could look for. Like, even in high resistance, you'll find that if you wait for these high probability trade signatures, that you'll probably find yourself like in a at least decent trade. Like, and you have to keep your stop, and if you're in high resistance, you can't really trail your stop like that, even if you expect it to go into low resistance, until it really proves itself. But yeah, so this could have been a nice short, although like I wasn't trading, and even just now when I was looking at it, like I missed it. But looking back on it in hindsight, like this would have been a good short, just based on like the previous logic that I just shared. Like, you'd want to see them build positions beneath sell side, and yeah, and just the relative equal high logic. And then that logic, especially, I like that because just because that one, I've shared that video with you guys a couple times, that live execution that ICT took. He puts a good amount of emphasis on this as well, mainly because I think it's important, because they're kind of like leaving sell side open, even though it's kind of jagged from all this sweeping. Yes, they're kind of still they're still focusing on generating it. They're more focused on generating buy side or generating sell side than sweeping buy side. And then when they finally sweep it, then it's like, all right, now it's time to sweep that generated buy side or generated sell side. Sorry, that was confusing, but yeah, I'm not gonna go deeper into this run because it wasn't super clean. But yeah, we end up having another leg lower, so runs deeper, trades consequent encroachment of this wick. I don't know if it fails or reaches it, but just reaches it, taps it, runs lower, fair value gap, and trades lower aggressively, and then fair value gap again plus end dog, and yeah, there was something I wanted to talk about in here. Oh, mainly I want to talk about so we had 10 a.m. news, and I explained that I wanted to see what happened at the 10 a.m. news. And although I took this long, and I don't know if I mentioned, but I was watching this, but I didn't end up being able to take it because I was kind of in a rush. But what's it called? Yeah, so I said I would prefer, or I didn't think it was likely that I'd find my setup at market open, but we swept liquidity pre-market open, so that kind of provided a pretty easy setup in my eyes, because if we sweep it in pre-market right before market open, it's usually just gonna run the other direction pretty easily. And so yeah, that allowed for that. That was the reason why the setup still occurred. And then 7 a.m. news or 10 a.m. news Eastern, that dropped, and we mainly just broke lower and entered a high resistance bearish. This is where we were like building positions. And then about like 45 minutes after that, we started dropping. And what's it called? Another thing, like, sorry, my brain is kind of like farting right now, but Another reason why you can expect that this high resistance might form down here, which, you can be like, why didn't it enter a low resistance? Like, why did it need to build positions down here? Is, first of all, you can anticipate it through like previous price action. So I mentioned, like with London kill zone, you want that to sweep Asia low or central bank dealers range low. In this case, it did neither. So you can expect post 10 a.m. to be a little bit funky until 10:50 to 11:10 macro is usually a nice rule of thumb where it'll leave that. But there will be some days where it'll be iffy after that even. But in this case, that was just you can anticipate that it might want to get a little bit iffy after here. And then let me also get opening range in here. And honestly, this is also just consolidating. By the way, this old range, it's still working it, but I'm going to take it off now. And with opening range, we're kind of doing like a similar thing where we're consolidating within the lower half. So if we weren't as bearish and we were wanting to just go lower a little bit and then maybe like trade higher and just like maybe either a high resistance bearish or switch to bullish conditions, then we'd trade around to the midpoint of the opening range and trade above it most likely, and like kind of just be aggressive about staying above here, and then it'd break down and then it'd finally end up like going higher, whatever it wants to do. But the fact that it's consolidating and staying within the lower half and even like the lower quadrant, beneath the lower quadrant right here, that's a signature that we're really going to be bearish. That price has like a lot of room to go lower. And let me take standard deviations of that too, just to see. There wasn't anything too crazy. Like you can see the negative 0.5 got reclaimed really nicely after like the first respect to it. And then negative 0.75 as well. Took it right into the -1. I feel like that was the most interesting aspect. That we tapped it, went into the -1, and then kind of went above it, and then traded down back beneath sell side. Yeah. And then the rest of the day became iffy, just because we had the NFP event today at 8:30 a.m. Eastern. So I mentioned that before, like PM post lunch macro, so 11:50 to 12:10 Eastern. It's gonna be real. Like market is just gonna be a lot more difficult to read, and that's just a rule of thumb. That's not always. Like it could have a nice hour after that. Like this was actually a pretty nice run. But that's a rule. Like if you're on NFP week, like you really want to try to stop trading. Tuesday after lunch macro. So I'm not going to cover this price action at all because it was honestly just pretty iffy, to be honest. And but you can see like there was some signatures for trades, but nothing too crazy. That was like super clean and super easy. And the Yoji took this short too. That was pretty nice. Yeah. I think that's all I have to talk about. I guess I also want to note that same old high I was talking about. It's coming back here. and it's like working it, kind of making sure all the buy stops are out. So right here, it's grinding out shorts. All right, so this is kind of like how I interpret the price action with like no drawings. It's grinding out shorts right here because what it's doing is it's above buy side, and it's so if anybody's short, they've either taken their stop or they're looking to take their stop if it like trades any higher. So when they go above the buy side, they're trading down, getting the shorts excited that, hey, maybe our stop will be safe. And then it consolidates, like shoots higher, and it takes their stop. Or if they still didn't take their stop, it consolidates, goes lower, excites them again, takes their stops. Or if they still didn't take their stops, consolidates, goes lower, and then shoots up. And that definitely took their stop. You know what I'm saying? Shorts definitely got stopped out right here. Now it's finally time that, hey, all this generated, well, actually, we already took it out, but this liquidity that swept the generated liquidity, we can go attack that now, pretty much. And, shoot, I was going somewhere else with that, but here as well, they're kind of grinding out, what's it called? They're grinding out any like short opportunities in my eyes, because like they're kind of setting up all these relative equal highs and sweeping them, and even back here, it just goes like so deep into the range that I feel like generally you would think that it closed above this fair value gap, like it's probably going to go higher. So in my eyes, this is kind of enticing everybody to go long. And it's like trying to grind out the shorts. And then we aggressively break down. And then at this point, like all the shorts, they already got caught with their pants down up here. And then they tried to chase price right here.
What happened to them?
They got their pants taken off. They got, you know, this is going to go on YouTube, so I'm not going to say anything crazy, but, you know, they got bad things happen to them. And then, and then now above this old buy side. So this buy side that we previously used to grind out shorts, now we're using it to grind out shorts again. You know what I'm saying? Like, anybody who, like, saw it, like, got stopped out, and then they saw this quick run, and now they're chasing price down here, they're going to see it go up back above this previous high again, and they're going to get stopped out. And then with these relative equal highs, they're going to get stopped out. And then when it finally starts dropping now, like, every short is stopped out. You know what I'm saying? Like, from here and from here. So it's ready to run. And from there, it was relatively a low resistance run. I wouldn't say there was any signature of high resistance in here. I would say it got deferred right here, and it got deferred right here. But that you have to allow for that. It can get deferred sometimes, you know. It's not like high resistance is when it's constantly getting deferred. So like swept this low, deferred into the range. Swept these two lows, deferred into the range. That was like a high resistance run. And then, like, if we go to a more obvious... Hold on, there was actually... I was mentioning this earlier, Slazzy, but you weren't here. So this is also constantly getting deferred. So, like, from Asia, create buy side, sweep it back into the range. Create buy side, sweep it back into the range. Create buy side, sweep it back into the range. And it's constantly doing that. You know, that's high resistance. If it does it 1-2 times, that's acceptable. That's usually just them building positions. And right here, by the way, I mentioned, sometimes it's going to be a little more difficult to read. So I mentioned this, like I wouldn't have seen that like 100% of the time, that this is what they're doing. But looking back on it in hindsight, and like, if I was super like, I'm a little tired right now, and I mentioned earlier, yeah, I'm a little bit tired, so I'm not in the right mind state, and you know, I'm not always gonna be when I'm trading, so you're not always gonna see this, but at the end of the day, you know, the logic's still there. Yeah, I think that's all I have to say. I'm not gonna lie. I'm about to run some games with my boys, so I gotta hop off. But do you guys have any questions?
No, thank you so much for talking to us.
Yeah, no, of course, bro. Dude, try to get that video of your car.
Oh, sir, yes, sir.
I bet. Sazi, do you have any questions?
No, I'm good. Pretty sure.
All right. Later, guys. Have a good one.
Wait, Hadi.
Yeah.
I know you're probably gonna be busy, but if you have time, could you do like a expectations? Because, bro, I was low key not expecting that big run up.
Yeah,
So I have no clue what it's gonna do.
Hey, Loki, I'll post the recording soon. I talked about that run up. Yeah, I didn't expect it either. I'm not gonna lie in the moment because I was.
All right, cool.
Yeah, but it was expectable. I just missed something and I was being stupid.
Got it. Okay.
But I'll mention. I mentioned that in the video, and expectations wise, I'm pretty much just watching. We have NFP on Friday, so I'm not trading tomorrow. But I'm pretty much just watching. So we've got. Dude, where did that standard deviation go? We've got this manipulation leg on the daily chart. If we run standard deviations of that, which by the way, I like this range especially because this lower volume imbalance included with it, we tapped into it and then immediately shot up. So I wouldn't want to see this range get returned to, which is why I prefer standard deviations on that. And now
so this candle, the one that's like the current one, right?
Mm-hmm.
That's like a big ass volume imbalance, is it not?
Yeah,
Huge fee.
it is. But low key, I realized these closes go off of with the settlement. It goes off of 1 p.m. So honestly, with this triple volume imbalance, like this might be the point where I maybe would want to take set off. But that's not clear to me yet. But yeah, this just it's starting to look really ugly. So I don't know if I want to keep set on. That's why I'm saying, like, soon if things continue looking this bad, I'm gonna take it out, take set off. But otherwise, I'm with this manipulation, like I'm watching the standard deviations. And then since we're in between two, and it's like a large range, I want to take the quarters of that and just watch how price reacts. And that's all I have going into NFP. We're more likely to grind higher, but I don't know what NFP is going to do. You know what I'm saying?
Gotcha. All
right, bro. Gavin already did, but I was going to ask if he had questions, but...
All right, later.
All right, later, bro. Have a good night.